10. Alrighty, guys, what's going on? Welcome to the weekly webinar where we break down the upcoming week, the sentiment for the week, upcoming economic events to look out for that can influence the market, some earnings, and some charts. Hope you guys had a great weekend, and let's get right into it. So we'll start off with the weekly economic calendar to break down some events and a couple of things that the market is going to be looking and focus on this week. Obviously, this week we have quite a few Fed speakers talking, but mainly the market is going to be focusing on employment numbers and situation. The employment numbers are always released the first Friday of the month. So this month, July, starting on Thursday, so July 2nd on Friday, we have employment situation before market opens. Market is going to be heavily focused on that. Other than that, a couple of Fed speakers throughout the week that we should be paying attention to, as those can cause some market movement, as well as the typical green and red dots that you see on my screen. Those can all influence the market. Those are not really main events, but they can also have a big influence on the market direction, change the market sentiment very rapidly. So it's important for us to understand that those events are there. You don't necessarily have to understand exactly what's going on during the event or listen to the event, but you should be aware that, hey, there's an event going on this day at this certain time, so you can prepare yourself trading wise and position wise, where you don't expose yourself to too much downside, and you protect your downside from taking on so much risk. Because what I see a lot of people do is get into positions before consumer confidence, before jobless claims reports, where they swing on Wednesday into Thursday, knowing that before market opens on Thursday, we have jobless claims reports that might make the market move very aggressively on either the downside or the upside before the market opens. Why are you opening a swing trade on a Wednesday going to Thursday on weekly contracts that expire this Friday, knowing that before the market opens, you have a big economic event that you have no control over with options, because you can't exit your position before the market opens, right? So those are some things to kind of just pay attention to, but mostly market focus on employment numbers, employment situation, jobless claims. Those are going to be the main focus, as well as some Fed speakers. Other than that, Chicago PMI, pending home sales, and then ISM index and construction spending. Those are going to be, events that can influence the market as well. Let's discuss earnings. Only two real stocks that I'm really paying attention to. Not a lot of earnings coming out right now. We're not, in the earnings season. I'm going to cover my XOM swing position. It's a couple of weeks of expiration, Joshua. I'm not going to be closing it just yet, and I'll walk you through my game plan on XOM right now. And again, I will get to those in just a second. For this week earnings, only two stocks I'm watching is Bed Bath & Beyond, BBBY, then Micron, MU in the chip sector. And then depending on how Micron reports earnings, we might see names like Intel, INTC move. We might see AMD move based off of how Micron reports, and also NVIDIA can move as well, depending how Micron reports. So those names are going to be on watch depending on how Micron reports earnings as well, because they're all in the same sector. And when one stock in one sector reports, earnings, whether it's good or bad, we might see other names in that sector react as well. So that's why I have those kind of names on watch. So without further ado, let's break down the overall market, SPY, and then a couple of stocks I have on watch and why I have them on watch. So let's break down the price action on the overall market. Let's start off with the weekly. SPY, as you guys can see, is still the very, very big bullish continuation. We're still bullish. There's a lot of bullish momentum on the upside. So there's no doubt. Let me see where the drawing thing is. There's no doubt we're still in this uptrend continuing. We're still holding all of the moving average, the 50, the 200, and the 21-day EMA. We're trading above all those, and we're seeing big green candles close on the weekly chart, indicating that buyers are still in full control, and we're still bullish on the market. So there's no doubt about that, right? Let's go on a smaller time frame and break down what's happening on the yearly, and then the daily chart, sorry, and then the intraday charts, so we can sort of go through a little bit of closer this week and see how this might affect us for this upcoming week. So right now, we saw last week going to Monday, we had this major pullback, and we had a lot of concerns because we were at this critical level on spine. If we didn't hold this 415 level, we would have seen a lot more downside as we announced. And then that day we had this candle form, we bounced off that 50-day moving average. As we saw, it acted as a support for the longest time in this bull market. On the daily chart, the 50-day moving average held as support, and we bounced and made all-time highs on the SPY, which is a good sign, indicating the market structure is still intact in this bullish formation, this bullish wedge that we're forming right now, making higher highs and higher lows. And market formation did not break, and we're still intact in this, which is a very, very good sign for the overall market, and that is healthy, right? And that also indicates that our levels being set properly at 415, 50-day moving average are also good. We saw a lot of strength and buying coming in here with the New Deal reached between Republicans and Democrats, and also a lot of fundamentals that drove this up, right? In terms of the technical levels and technical perspective, what it is that I'm going to be paying attention to, let me just move this so I can shift my time frames. It's going to a smaller time frame, the hourly chart. Obviously, there's a few levels, a few gaps to pay attention to. This week, we gapped above the previous all-time high, which was at around 425.50. We gapped above this level, made a new all-time high at 425.90s, and then rallied and made another new all-time high at 427.09. Friday was sort of a digestion day where we didn't have a lot of clear action. Saw some rejection at the top of this trend line of this wedge here, indicated by these 2 wicks here, some indecision on Friday. So what I'm watching for this week is if 426, 425.90 is going to hold. If this entire gap zone that we gapped above can hold, we should remain bullish. So as long as we hold 425.50s, we might consolidate here for a little while before making another move on the upside. Obviously, we saw a big aggressive move from 415s to 427s without the SPY taking a break. We saw a little consolidation here, gapped up, continued, and rallied again. So it's not going to be a surprise if we see some consolidation between 425 and the next all-time high between these levels for the next couple of days before we decide and process the news in the market and figure out whether we're going to go lower and retest 420s and this uptrend line, right? Or we break all-time highs and continue the market structure upwards and break on the top of the trend line. So that's going to be up for sort of discussion this week, and we're going to have to see how the market reacts. But there's no doubt about the fact that we're still very, very bullish in just the way the price action is forming and we're reacting to the market. Again, as long as this gap area right here holds, we should remain bullish for the most part. And the good thing that I've been seeing is that not only is tech and growth stocks following through, we've seen a lot of momentum on a lot of tech names, Teslas, a lot of Netflixes, a lot of other tech names like Facebook, Asana, and other names in the tech industry making all-time highs, Amazon pushing like crazy, and Shopify, a lot of other names in that industry, but also stocks in other sectors, industrials, travel stocks, everything seems to be holding up, which is a good confluence to understand that it's not only one sector driving the market up, it's all the sectors that are being bullish right now. If you know, XOM, Caterpillar, stocks of that nature are also holding up and making yearly highs as well, which is important because when you see aggressive big moves like this on the overall market, you want to make sure that the overall market sectors are falling through, that it's not just an outlier and one sector pushing the overall market. It's all market participants really, really pushing and making highs, which we're clearly seeing right now, which again confirms this bullish move as legit having some weight on it. But with that being said, let's move on to some stocks I have for this week, break them down and kind of go over why I see value in them and see what kind of plays we might have for this week. Let me just get some water, hold on. Alrighty, so number one, we have Airbnb. Airbnb has been on my watch. They have had, let's go on the weekly chart first. As we see on the weekly chart, indicated by these 2 wicks that we see on the last 2 or even 3 weekly candles closing, we see a lot of selling, a lot of rejection at this zone that is the box right here that you see between the 150 and 155 levels. So there's a lot of selling pressures sitting there. There's also this wedge forming where we have these lower highs and higher lows forming, and we're sort of in this consolidation for the last couple of months where price is getting compressed, and now we have to figure out which way the price wants to break out, whether it's going to be on the upside or downside. We will see a big aggressive move. I'm expecting a 10 to 15-point move on Airbnb in the next coming week or two, and I'll explain why. So if we shift onto a smaller time frame, we clearly see again, multi-time frame analysis, that this level between 152, 155 has acted as a major level of resistance. As you see right over here, we have a lot of selling every time the stock gets to 152, 155. We see a lot of indecision showing by those wicks. We're also getting rejected by this 50-day moving average right over here, which is a big level of rejection. If we're able to break over 155 with some strength and volume, this can definitely have all those accumulation shares that have been accumulating here push through and reach next levels. For next levels, I have 160 and 164 on Airbnb. So from a breakout of around 155 right over here, we can expect a move to 160s, 164s on Airbnb, because again, during this move right over here, we have had a lot of accumulation, as you see by this volume right here. There's a lot of shares sitting here, and if we can see a big move up, especially with the fundamentals pushing this, Airbnb is more of a travel stock. COVID restrictions are being lifted. People are traveling to Europe again. Planes are flying, more bookings are happening. So fundamentally, this is a great opportunity. And then technically speaking, this is also setting up nicely for an upside move above 155 and break of this 50-day moving average. We can definitely see a nice move on an intraday time frame. So I'm looking to day trade this, but also looking to swing trade this maybe a couple of weeks out of expiration, a little bit out of the money, maybe at 155 or 160 calls once we see some more traction and buying pressure kick in, and we see this tight range squeeze out of this 155 zone. So that's the trade idea for Airbnb. Next, we have Alibaba. Alibaba, let's go again on the weekly chart, has held a massive uptrend that has been here since pretty much 2019 that we have been forming here, as you see, holding this uptrend, and now we bounced and had a big green candle that we're seeing here right now, and we had a big bullish engulfing at this support, big bounce in Alibaba. Lots of great news on a lot of Chinese names. Similar thing we're seeing on Baidu, but Baba is a little more of a promising stock on watch for me personally, just the way I trade and the way the premiums move. So let's break this one down. As we see, we have bounced here on this support, and we're sitting at this 21-day EMA right now at the mean price right now. So we have to see what's going to happen this week. Over 230, we can definitely see another continuation. Let's go on the smaller time frame. As you see, we had this sort of falling wedge pattern for the past half a year, where we're making lower lows and lower highs right now, and then we finally broke out of this wedge formation where price again was compressed, had to make a decision, and buyers stepped in and broke out of this range. I want to see what happens and how the stock bounces around the 228, 230 range. Obviously, this is where we closed on Friday, had a lot of buying into the close on Friday as well. If we go on a smaller time frame, we can see what action happened on Friday. As you see, at around 15:30, so 3:30 p.m. into market close, we had a big spike here from 225, went all the way up to 230 and closed right below 230 at 228. So a lot of buying happened here on close. So this is a perfect setup to watch for continuation on Monday open, to see how it reacts around the levels on Friday. Obviously 228s, 230s are going to be on watch to see how we react near those levels. So intraday, again, 228s, 230s, want to see how the stock reacts here. Let me just add these to the chart so we can obviously have a little bit of a better visual. This is where we bounced on Friday right before the close, and this was the high of the day. So around 230, right? This is where my eyes are going to be on Monday, seeing where we can head from there. Then after that, obviously we have next levels 231.20s, and then if we do see a big massive continuation, there's a lot more buying happening in the markets. We can see this become another big mover to 236s, 240s, no problem on Alibaba. Again, looking to day trade this and potentially also open up a swing a couple of weeks out of expiration if we see strong buying. Facebook, another bullish name, made all-time highs last week. Friday didn't have a lot of follow through, had a lot of digestion names, kind of flat on Friday. Let's start off with a bigger time frame. As you see, we're in this sort of rising wedge formation, and a lot of stocks are in this formation right now. I'm going to break it down on what it means for the market. If you look at the SPY, it is pretty much in the same formation too. So it's following the overall market. As you see on the overall market, we're still in this sort of formation that a lot of stocks are also following, this sort of rising wedge formation. So you're going to see a lot of similar, technical setups on a lot of names, and they're going to correlate with the overall market. So we saw price action levels wise, we saw a lot of rejection previously in the last couple of weeks. This 338, 330, 340 level. A lot of selling pressure happened here. We gapped through it, finally broke through this level, made a new high at 340.90, so right around 345. And now we're pulling back and consolidating. So this week, going into this week, I want to see hold of 338s, obviously 340s, hold of 340s. Want to see consolidation here between these two levels for a potential extension up, but there's going to be some indecision in terms of price action. While the stock is still between 338 and 345, we might see a little bit of chopping around. But if we're able to get over 345 in the next couple of days, we might see another push extension on the upside. If we can't hold 338, expect this to break market structure and have a leg down, pulling back to maybe around the 330 area, this 21-day moving average at 332. These levels right over here actually acted as a clear support, as you see by the wicks and the price action. So those are both, the bullish and the bearish setup we have to expect. So if we can't hold 338s, expect some sort of pullback to previous levels. And then as long as we hold the levels here at between 338, 340, we should see a nice continuation on this if market structure is intact on a small time frame. Let's take a look at this. As you see, again, previous levels clear, very clean price action here, clear breakout of previous all-time high here, rejection all through here, and now we made a new all-time high. And as long as we are pretty much within these two zones, we will be trading sideways. If we get under 338, we might see some downward movement. If we get over 355 on the upside, break new all-time high, we might see another push on the upside. So that's Facebook for you on both the bullish and bearish sides. Let's move on to the next play. Next play is FedEx. FedEx had earnings last week, and we had a gap down on the stock. Let's go on the bigger time frame. Bigger time frame wise, we are a little bit weaker with the overall market. We're not, as near to all-time highs. A lot of other stocks are right at all-time highs right now, sitting right below all-time highs. The stock is, starting its bearish formation now. We're still intact in the bullish long-term trend, but we have started the first phase of the shorter-term bearish, formation. We're still intact in this sort of bullish trend line. So this bullish trend may still hold, but there's a lot more, probabilities that this might continue selling off if we have bad news and bad sentiment. So there's again two probabilities of this, going up or down. I'm going to break down both scenarios. So in terms of the bullish sentiment, we're still holding this trend line, the long-term support that is this red line, making higher highs and currently bouncing here. But if that doesn't hold, we might see lows forming. We're actually forming this wedge where price soon will have to decide again where it wants to go. And we had earnings last week and the stock ended up gapping down. So if we go on the smaller time frame, we clearly see that the stock got rejected here at the 3 to 5 level, gap down below 300s, gap down all the way to 290s. 290s held, retested 292, 293 level, this level right where it gapped down to. And now, we have to see on Monday whether we start filling the gap to the upside and fill the gap between 293 and 304, or we reject here at around 293 and make another leg down in FedEx. So this would be an interesting one to watch. Clearly, if we break 290s here, this uptrend line, we might see a big move continuation down on FedEx. to 280s, maybe even lower this week. So this is definitely a watch on both the upside or the downside. Gap fill on the upside above this level if buyers are able to reclaim. If not, we might see a rejection out for this level where we gap down to, and then continuation ABCD pattern sort of thing on the downside. What I mean by that is you can, again, Google it, but this is starting to look like a typical ABCD pattern where we have, the A move, the B retracement, the C, and if this is a hold, we might see another leg down and then the D pullback. So we might have the 5 market phase structure form here with lower lows and lower highs breaking the lows. As you see here, we're making the lower lows, and we might see something like this happen. If this level is unable to hold, we might break this trend line and head lower to the next level of support. Around 282, 280s is where I'm watching for FedEx to potentially head down to. Next, we have Netflix. Netflix has had a lot of buying pressure this week, has picked up a lot of volume and volatility finally back again on Netflix. We had this sort of round bottom that has acted as a big level of support. This 500, 510 level finally cleared this level, and we have had a couple of days with gap ups and continuations on Netflix. Very nice clean price action on this, and stock is looking a little bit more on the bullish side. In terms of levels on the upside, the 529 to 534 level is going to be a big level of congestion, but if we're able to get over 533 to 534, we might see continuation on this, and I'm watching this on the upside to 540, 545 on Netflix. This is, again, looking bullish. We have this W pattern here, making a higher low, breaking the neckline, and then, gapping up. And this might be a continuation player, and we might reach eventually this 560 level here on Netflix. So this is something I'm watching for price action level-wise. So let's kind of establish these levels and go into smaller time frames to see what's really happening here and what we can expect this week. So let's go on the hourly chart and see. Obviously, we had this clear W formation form with the rounded bottom, made a higher low here, and then broke this neckline that we're seeing at 510, consolidated here, and then gapped up above this level, 525s, and made another high. In terms of this week for both the upsides and downsides, for this to continue, we need to see this consolidate a little bit and this level hold here. If 526s can hold here, 525 is level that gapped above. If this level can hold, expect a possible continuation on this above 530. We sort of have this consolidation after the gapped up, consolidated, and now on Monday over 530, we might see another move on the upside to 530, 320s, 534s, maybe even higher. So this is my sort of play Netflix. Obviously, if the gap can hold and we see some weakness in the market under 525, we might see a gap fill down all the way to 521s, and this would be your downside play on Netflix. So again, set your alerts for a break of 530, break of 525, and follow through with the stock this week. But this is a very clean and nice setup on Netflix here. Another setup I'm looking at is Nike. Nike report earnings and blue expectations by all means. Take a look at this volume and gap up, serious volume here on Nike. Blew through all-time highs, gapped up massively, 15% on the day from 133 all the way to 154.50s, making an all-time high on Nike. Broke this previous highs here where we saw a lot of resistance between 145 and 148. Similar idea on the upside and downside in terms of gaps as Netflix here. We might see a move both on the upside or downside of market sentiment strong. Watch for a possible continuation of 155 break on the upside. And we might see a little bit more of a squeeze in volatility there. But seriously speaking, we might see this chop around since there has been a big gap up. There might be a lot of profit taking, preventing this from going higher, and especially if the market is a little bit weaker. So expect some consolidation here after this gap play between 150 and 155 here. We might see some consolidation action going on here in Nike before making another high or breaking down below this gap level and filling the gap on the downside. Let's go on the smaller time frame and see exactly what I'm talking about. So as we see here clearly, similar to Netflix, we had a gap up, not as big on Netflix, but And here it's evident we gapped up above all-time highs, 150s, held here, made all-time highs, and then consolidated between these two levels. So if these two levels can hold, we are intact in the bullish market structure. If 150s can hold on the downside, we have all this room to fill down to 134 on the downside, and we might see some profit taking happening. The stock sell off a little bit, and people take profits on this. But if 150s hold and we retest maybe 150s and buyers step in here and consolidate here, we might see another continuation play here above 155 on this. So Nike definitely on watch above 155 for a continuation on the upside, and a break of 150 for a possible sell-off and gap fill on the downside. Next, we have Peloton. Peloton has been a leader for the past couple of weeks, and I know a lot of people played this, and we call this out in a group. Currently trading above all moving average, so reclaimed as bullishness. I know a couple of month and a half ago, we had the bad news about the treadmill. A couple of people died on a treadmill. We had this, meltdown. The stock had broke hundreds, went all the way down to 80. And now we're back above 120s on Peloton. So reclaimed almost 80% of the loss, from 80 to 120, 80% gain or so on Peloton from that sell-off caused by the news. Bullish currently on Peloton, trading above all the moving average, the 50 to 221-day moving average. And we had this clean price action move above 114 that I was looking at for the last couple of weeks. We had this push, sideways consolidation, and then another extension on the leg up. This can be a serious mover over 125 is where I'm watching it. We can see 130s, 132s, and this can be very bullish. And in the next couple of weeks, we might see 140s on this and sort of test this previous high that we have made there. But currently, this is very bullish intact here. I want to see how it acts around 120s, 125s on the upside on Peloton. Next, we have SPC space. Again, had a big gap up, similar to a lot of those names that I'm covering, like Netflix and Nike. Want to see what happens here this week, and want to see what kind of price action movement we see. Clearly, on the yearly chart, we see a lot of rejection on the previous all-time highs at 62.80s, 257. So this is a big zone to watch this week between 57s, 62s. We have seen a lot of rejection there. The past time we reached all-time highs, we went from 62s all the way down to $14 on this move rejection. Now buyers came in and reclaimed these levels, and we're testing close to all-time highs again on the smaller time frame. Let's see what happened here. Again, we had bullish news, approvals from the FAA to go to space and stuff like that. Bullish gap up above multiple levels that we had. 46s gapped up, held this level, and then was a gap and go play, gapped up above 46 and went rejected 56 here, and then on close pushed above 57s. So definitely watching this. I want to see if 57, 30s, 58s can break on this on the upside. We might see a continuation on this. Very bullish in space. A lot of open interest on the contracts on this farther out of the money. 60 strike, 70 strike, a couple of months out, expiration in space. A lot of volume there. So a lot of people expecting this to make a large move. So definitely on watch for this week. And this can be a big momentum volatility mover, especially if we see a close above 60. We have never seen a close above 60 on this. Every time we pushed above 60, yes, we saw price action there, but no candlestick on daily actually closed above 60. As you see, there's only wicks here. So if we can close above 60 here, this can seriously have some more buying pressure come in. Look at this volume, and we might see a break of all-time highs in this coming week on this. So definitely on watch here on space. A lot of great setups setting up here. Tesla also, if we go on the weekly chart, great hold of the uptrend line, similar to what we saw on Alibaba. I made higher lows here on the support, and the support held. We were in this wedge and finally broke out of this, as we see by this bullish candle that closed above the moving averages here. The 50-day moving average held, which is a great news for Tesla. We were in this consolidation for pretty much months. So now that that's over, it's good news. On a smaller time frame, Tesla ran again, broke out of this, squeezed a lot last week over 630, squeezed all the way to 694s on Friday, I believe. 695s was the high. And then again, consolidating here between 700s and 667s. So watching this to see what kind of move we have. Really want to see what happens here between 694 and 700, so we can get this taken out on the upside. We might see a potential extension on the upside and continuation to 717s. And then in the next couple of months, we might even retest the highs at 778. If not, if we go on a lower time frame, this might be a play tomorrow morning. If we see some weakness in markets, you might see a gap fill on the downside. As we see on Friday, we gapped above this level here at 667s. And then, Thursday, we gapped above 667s, I believe. And then went all the way to 697s Thursday, Friday, and then closed right above this gap level here on Friday at around 671. That is where we closed on Friday. So under this, we might see a flush from 667 down a gap fill to 660s is where I'm watching the level of gap above. So this might be a Monday morning weakness play that I'm watching as well. And let's break down a couple of more names I have. So Wish stock we've been watching, similar to AMC GME type of move we're expecting here. A lot of volume on this stock, a lot of accumulation happening at the $13, $14 level. Look at this volume, 300 million shares traded every single day, which is absolutely insane. On the price action levels, making again this sort of inverse H bullish formation here, double top pattern, but having a lot of difficulty here at the $15 level. As we see, $15 was level of support here. Support again, we flushed through it, and finally, acting as a resistance here. Couldn't break 15s here, and now we're just trying to get over $15 here. So that is something to pay attention to this week. Over 15.50, I do think we might see a bigger squeeze, big move happening here with a lot of volume to $17, $18. This is also interesting because we might see a big gamma squeeze on the stock due to so much liquidity and volume being in the farther out of the money strikes. If we go on, the farther out expiration for, monthly contracts for July 16th, there's a lot of liquidity and open interest in the 15 in the $20 strike price is 22.50. There's 33,000 contracts open, 46,000, 52,000 contracts open. So a lot of people are betting a lot of money that this stock might make a big move on the upside, which again is potentially going to influence a big squeeze. So right now in cash, I don't really have a position on this open, but if we are able to see a big volume move above this $15 level, we can definitely expect a big squeeze here on the stock. Friday we saw a little digestion, a little consolidation, but in terms of like the longer time frame, we're still in this bullet market structure. The uptrend is still intact. So I want to see if this holds. Consolidation between 14 and 15 would be ideal, and a break above 15 with a push up would be nice. And last play that I currently have a swing open on is XOM, ExxonMobil. Let's start on a weekly chart. This is a beautiful weekly chart that we're seeing here. As you see, resembling a lot of what the overall market is looking like. If we look at the SPY, similar sort of bullish wedge that we're seeing here forming. But let's see XOM here again. On the weekly chart, about 3 years ago, we had levels around the 67, acting as a level of clear level of support here. And then, as you see right over here, we acted as a support here many times in the past, about 3 years ago in 2019, 2020. And then when COVID hit, we broke through those levels. We've never retested those levels yet until now. We're really starting to approach this level, this level where we wicked down to at 64.50s. We just broke this level on Friday, and I closed above 64.50. So 64.66 was the close. And then we have a lot of support at $66 to $68 here on XOM. And right now, we might very well test those levels this week. We're looking very bullish on XOM, and let me kind of walk you through and explain why. So let's go on a daily chart. As you see, we just made yearly highs on this chart for the yearly chart on XOM. Made highs yearly, so this is bullish. We're also in this sort of bullish formation, still market structure holding this bullish flag that we're seeing, and we're definitely seeing buyers step up higher and higher every single time. And we're making higher highs and higher lows in the stock. Every time we push, we make higher highs. Every time we pull back, we see buyers step in at a higher price level, indicating that buyers are really, really aggressive on the stock. If we look on the 20-day 1-hour chart, we clearly see buyers are still active and present. And we saw this cup and handle formation form, which is again a bullish formation that we're seeing here on, give me a second, sorry, on this hourly chart. We see this sort of cup form right here, and then the pullback handle forming on XOM. And I'm really watching above 65. If this week we can see close above 65, I'm really bullish on this. And I think we might see a big move this week. This weekly candle might see 66, 50, 67s on XOM. So if we look at the weekly candle and the ATR and XOM, obviously in a matter of a week, XOM doesn't really move, that much. It doesn't have, crazy moves, but when it does move, we can see a big move happen on the upside. So, if we look at average candles, so here from 57 to 61-ish. So an average candle, an average bullish candle on XOM is about $4. We might see another $4 move here on XOM, retesting those levels, those weekly levels here, and filling this sort of gap on the upside to the levels that haven't been tested in 3 years, and having a bullish formation here to 67, 68. In terms of the position I have open right now, I'm down a little bit, about 10% on this swing. Let me show you the trade I have. I have 100 contracts open on a couple of weeks out expiration. So in XOM right now, let's go on this position. I'm down about $1,000, which is, in terms of this position size, it's a $15,000 trade. It's about 8%. I got on contracts at 145. They're at 135 right now. So still, holding those. I got the $65 July calls on XOM. I'm expecting again a move this week to 66, 67. So assuming we move to 66, 67, those contracts might go to towards $2.50. In terms of why I picked a couple of weeks out expiration is, again, I'm planning to hold these contracts a little bit longer, as XOM tends to be a slower mover, and I don't want to have my assets depreciate that much with data. If I just pick the weekly contract and the stock doesn't perform the move I'm expecting in 1 week, I am pretty much setting myself up for my contracts losing a lot of value, especially if I'm going out of the money and I don't have any intrinsic value. But with XOM, I decided to do July 16th, giving myself about 2.5, 3 weeks out to expiration to make this big move. My break-even price at expiration, if I got my contracts at $1.45, and then my strike price is 65, right? So my break-even cost at expiration. So by July 16th, I need the stock to be at $66.90 to break even pretty much on the stock. If we get above 65, 66, 90 before that expiration, I'm obviously going to be making money. So I'm expecting, if this week, maybe before July 1st, we see a move to 67, 68, those contracts might be worth $2 to $3. And that way I'll make, 30 to 60% move on those contracts, and I'd be pretty happy on those. So that is kind of my idea. In terms of risk management, if we see weakness and we see a day close below 64.20s, I will get out of those for a small loss of maybe 10 to 20%. So we saw a lot of buyers here between 64 to 64.20. Again, I want to see 64s hold for me to remain in this play. So 64, 64.20s is where a lot of buyers are stepping up into this, formation here, forming this handle of the cup that we see right here. And if we can't hold the 64.40, 64.20s levels, I will be closing out of the swing and finding some other place to put my money into, or maybe revisiting this play at a later date. But that is it, guys. That is what I have for watch on this week. Hope you guys enjoyed this webinar. I will be seeing you guys on live voice trading tomorrow morning. Thank you guys so much for tuning in, and I hope you had a great weekend. I'll talk to you guys soon. See you later.